You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' tune means it is time once again for the Option Block. Everybody's favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you live from, or at least live to tape, from the options capital of the world here. Scenic, sunny, somewhat tropical this time of year compared to what we usually have this time of year. Not too bad. Chicago, of course, and we're coming to you from the Options Insider Radio Network HQ. Our studio is here where we produce a wide array of fun programming. If you haven't checked it out, this is the first time you're stumbling upon our content, or perhaps you've only been listening to the Option Block, you haven't explored the full depth of our content offering. By all means, we encourage you to do just that. The easiest way to do that is, of course, head over to our website, theoptionsinsider.com. All the radio stuff is there, as well as, of course, breaking news from the options market, unusual activity, analysis, education, blah, 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 all that fun stuff. You know the deal. Surf on over there. Check it out. I think you're going to like it. And, of course, if you're hardcore, just want the audio, still a lot of ways for you guys to do that, of course. Probably the easiest, go to the big audio providers, iTunes, TuneIn, Stitcher, subscribe in there. Just type in options into those search bars. Guaranteed you're going to find our stuff. Or you can just grab our mobile app, available for iOS, Android, and even the Fire OS. All right, and joining me on the old program today, starting off, let's go in order. Well, I'm not sure. Even in order of proximity. It's a bit of a head-scratcher because we don't know where the beat ball is beaming in from, so I guess we'll just go for him first. We are joined by the one, the only, the crazy, the greasiest of all greasy meatballs, Mr. Mark Sebastian, from many dalliances over here on the old network, including his moonlighting gig over there at OptionPit.com. Mr. Greasy Meatball, welcome back to the program, sir. And what did you have for lunch? You have a nice greasy meatball sandwich?
I did not. And that just goes to show you, folks, be careful when you say, you know, my friends used to call me XYZ if you don't mean it, because it might just stink. No, or it might just stick. And
or stink.
Yeah.
Depends on the type of sub you have.
I had some delicious pierogies available on LaSalle Street that really hit the spot today.
Some delicious pierogies. Chicago, a home for not just Irish pubs, listeners, but also for some good Polish food as well. And also joining us for usually a little closer to home, today probably a little bit farther out. You know him, you love him as Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here, and along with the fact that you should never say they always called me XYZ in college, you should also never tell Mark about any Cisco trades, because he will not let you forget about those either.
We all have our Vietnam, sir, and that is yours.
It is.
Cisco, Uncle Mike's Vietnam. Before we get into more strained analogies, listeners, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, you know what time it is. It's time for us to break down what was moving, what was shaking, what was catching our eye in today's market activity. A bit of, I suppose you can call it something of an up move today. I suppose if you really had to split hairs, a bit of bullish activity. on the old street today. Of course, I am joking. It was Bullosaurus, Bull Stampede, call it what you will, on the old street today. Most of the major indices just rally home mode today, with the S&P leading the charge, up 35 handles roughly as the day comes to an end here, nearly 2% on the day. That's just slightly off the highs of the day, closing right around 1987 or so. They got to, I believe, about as high as 1989 intraday. So very, very close to the highs of the day. So the bulls have a lot to chew on and smile about today. The Dow and the Qs also following suit with similar percentage moves. And of course, if you do the math, listeners, you know that means the other big index I like to talk about here, the other big fear gauge, call it what you will, often bandied about, often mistakenly bandied about, the old VIX Cash, breaking the streak finally. Yes, indeed. The streak was running many, many days, closing over 20. I believe we were up to about 29, if not pushing 30, which, as I recall from my list here, would have put us right in the hunt to get the number 17 spot. I think we were tied for number 18 on the list of the longest extended periods of the VIX Cash, closing above 20. I think we had just supplanted or about to supplant the old February 14th, the Valentine's Day VIX extravaganza of 1990. We had just supplanted them on the chart, and now we're back to square one. Interesting stuff. Perhaps we'll start there. Mr. Greasy Meatball, is your heart broken? Do you have a single tear on your cheek now that the streak is no more?
No, none in particular. I mean, you could kind of see the writing on the wall. It's amazing how bad economic data forcing the Fed to not be able to raise rates and stop their wobbling can be such a positive thing for the market. I think this is extremely indicative of how much the Fed was screwing up financial markets with their shenanigans and boobery. It was just, they make financial decisions that are affecting the world, like my wife picks out what pair of shoes to go with her outfit, trying on 15 different things. It was embarrassingly bad. I understand why everyone feels like they've lost confidence in the Fed, because they should lose confidence in the Fed. They come out of this whole thing looking like fools, and rightfully so.
Interesting. I did have a good debate with your counterpart there, the Rock Lobster, on Friday's Vol Views about will we, won't we stay above 20 this week. I was on the south side. He was on the north side. Looks like, so far at least today, one day in, I'm on the winning side of that equation. We'll see how that plays out. Every other shoe could drop by Friday, of course. We could easily be back into the 20 handle range. But you do make an interesting point, too, about Miss Yellen. You're kind of right. This today's rally is a bit of, well, not a bit, quite a bit of result of the market essentially forcing their hand and really kind of showing them there really is no way they could possibly raise rates this year, not with any sort of real, aside from the fact of just doing it to say they were going to do it. And of course, the market tends to respond to certainty, and we really have gotten anything but out of the Fed over the past few months. And if today's rally is any indication of just you're right, the market not really liking what they've been getting out of the Fed over the past few months. If you're going to do something, do it. If you're not going to do something, don't do it. But don't jump in and say we may just to add uncertainty for the sake of uncertainty. There we go. That's my Fed beating for this episode. We won't turn it into the Fedcast. Instead, we will turn our attention to Uncle Mike, too. So, Uncle Mike, first off, what caught your eye in today's activity? And secondly, are you shedding a single tear now that the VIX elevation streak has come to an end?
Well, how come I don't get to bash on the Fed? You guys get to bash on the Fed.
All right, fine. You get 1 minute starting now to bash the Fed.
You guys said it all. I don't need to. But anyway, no, what caught my eye today, I think that, like you said, I do agree. This is a lot of the Fed-based rally, in that we feel that the interest rates are not going to go up. And I think that the other thing that needs to be said, which I think you had even mentioned in the show notes as well, if you look at XLE and a lot of the oil stocks, XLE, just as an example, is up 3% on the day. I think that was a big rally today. And to kind of steal a little bit of your thunder, Mark, of what you had brought up in the show notes, along the lines of how Russia is now saying that they might come to the table, and they're basically getting involved to possibly hold the price of oil up. So I think that's an area with which that could be a little bit of a turbo boost to the stock market in some way, shape, or form. With with that, the other commodities that moved on the day, silver was up over 2%, which would be expected, but was not what kind of surprised me a little bit with the news from Russia, with what's going on with oil. The other shiny stuff, gold, was actually down slightly on the day today. Not a lot, 22 cents, so 0.2%, which is pretty much a nothing move for GLD anyway. But that was surprising to me with the movement with which we had in silver. The other thing that caught my eye were bonds. If the Fed does not raise rates this year, if that's the news with which we're going off of, then bonds actually came down, or at least TLT came down anyway, 1.3%. Now, I do believe that one of the reasons for that isn't necessarily that, we're afraid that the Fed's going to raise rates, because we just established that we kind of think the Fed's not going to raise rates. I think it's just kind of a movement from safety into risk. So it's more of a risk-on style of trade. The other thing that's of mention that I think it's important to mention right now is that if you are looking to buy on some dips for a more longer-term play in some way, shape, or form, you do have a lot of opportunities in some blue chip stocks. Johnson & Johnson has definitely been battered down. Johnson & Johnson is a stock that a lot of people believe that has been is a blue chip style stock, that it's going to be here long after any of us are. It's on a dip right now, and there's a lot of stocks like that. Just to name a few, there's Walmart as well, Verizon, just a lot of the Dow stocks. If you're looking to sell some puts, perhaps start some wheel trades, it's still not too late to do it. It would have been nicer to do it last week, of course, with the VIX above 20. But if you're looking to do something in the longer term, once again, emphasis on the word longer, and also emphasis on the word term, might not be a bad idea to start looking for things like that. With that being said, though, I am still of the school of thought that the S&P needs to break 2,000 and SPY needs to break 200 before I'm going to start putting my money where my mouth is in this market. And that's coming from the world's most predominant bull.
Interesting. So today's rally homo didn't change your mind at all?
We got to get over 2,000 or 200 in SPY first.
Well, it was, like you said, rally ho in a lot of products across the board. It was a good day to be a bull, unless you're sitting there holding a lot of vol, then perhaps not so much. But still, you're right. It was a little bit surprising with silver and, of course, all its ancillary products like SLV up strongly on the day, over 2%. Like you mentioned, we didn't really see a commensurate move out of the other shiny stuff. It was up slightly earlier in the session, I think about 0.25% or so. Ended up closing the day down, essentially down about 0.25% or so as well. Again, kind of also speaking to some of the different use cases you really see for those metals, one being more on the industrial side and one being industrial but also widely used in a lot of other areas that don't really fall into the same use case. So sometimes silver and gold not really playing by the same rules. Crude, of course, having a good day as well. All that news coming out of Russia really giving crude a little bit of a lift to the upside. At one point, it was up nearly 3% intraday over there on Brent. WTI a little bit less, but still rallying over $1 today. Both of them still south of the 50 handle, but flirting ever so closely with that all-important level. And since we were talking Fed earlier, this is not really options related, but it came across our radar today, and it kind of just, I thought, merited some discussion on the show. We are, of course, in a new Fed regime. Janet Yellen, as we've said many times on the program, that means it's time now for the old Fed regime, a.k.a. Bernanke, Uncle Ben, the Bernanke put of infamy and fame, both. His turn now to kind of tell his side of the story, aka memoir time, and the leaks coming out of his show a lot of the same stuff you'd expect from someone who's kind of still so closely removed to the events, doesn't want to really step on anyone's toes, but also oversaw some very tumultuous times as a Fed president, I think, to put it mildly. And they shine some interesting light on his background in terms of he grew up kind of with this fear of the recession beat into his brain, so he went into 2008 kind of with that mindset. May explain some of the actions that they took. One of the interesting takeaways from this, and this is something that a lot of people have written into us and just said in general since the 08-09 crisis/meltdown, was that it's stunning that no one really got perp walked for all of that, and especially given the government, everyone's need to have some sort of a scapegoat, they didn't just drag one out. And certainly their ways of essentially just going after the firm rather than the individual, leaving really no individual culpability, no individual accountability, left a lot of people, I think, really rubbed the wrong way. Seems like Uncle Ben feels the same. He says, it would have been my preference to have more investigation of individual actions, since obviously everything that went wrong or was illegal was done by some individual, not by an abstract firm. So in that respect, I think there should have been more accountability at the individual level. He goes on to say somewhere else that every time he saw one of those bumper stickers, "Where's my bailout?" he said it kind of stuck him in the heart. And on one hand, that's good to see that kind of belief. On the other hand, you kind of have to wonder, you were Fed chairman. Granted, that's DOJ's purview, not yours. You get into some internetwork issues there, but still, you had a little bit of skin in the game. You could have perhaps insisted on that a little bit more. This is not exactly options related, but it's kind of top of mind for a lot of people right now, so I thought we'd discuss it on the show really quickly. Mark or Uncle Mike, anything you want to add here to our friend Mr. Ben, all of a sudden now in his later days, saying, you know what, we really should have held some people accountable for that.
Yeah. Add that to his ridiculous op-ed about how the Fed saved the economy. Are you freaking kidding me? Get over yourself. I mean, this just reeks of Monday morning quarterbacking and, trying to justify his existence. And, I think what we're seeing now, a lot of what he did is he opened Pandora's box. He turned normalization into zero rates instead of a normal, healthy interest rate. And, one thing people forget is there's a strong argument that a huge portion of the pension crisis is being felt countrywide are directly related to abnormally low interest rates for a decade and a half. And so, for how great that guy is, what did he really, who is he to comment on who should and should not have gotten arrested? I mean, seriously. And, in addition, I mean, think about this. They were the group that was begging J.P. Morgan to take over Bear Stearns. And then Jamie Dimon reluctantly takes over Bear Stearns. And what does that group do? All right. How about some sort of, equity in what you're actually doing? All right. Go after somebody from Bear Stearns or Countrywide. Instead, we're going to just milk the big banks. This was never about prosecutions. It's always about milking cash. Look what's going on with Fannie. All right. The federal government has made hundreds of billions of dollars off what was allegedly a crime. Get over yourselves. That would be my answer to Ben Bernanke, who's now come out of the closet as kind of a big government type of guy. Let's just say I'm not saying and thinks that the answer, just the title, "The Fed Saved the U.S. Economy," is just so ridiculous. Get over yourself. Just makes me angry when that guy opens his mouth.
A lot of love for the Fed today. Uncle Mike, what is your take on Uncle Ben here?
Yeah, so much for the "we're done bashing the Fed" type of thing. Now, I think yes, I'm in agreement with you on that, Mark, but to take that to the next level, I don't like the fact that we're in a position to where the Fed has the power to, quote, and I'm putting up big time air quotes as I say this, save the economy.
Right.
So with that being said, the story of the Fed, for our listeners, Google search the story of how the Fed came into existence. It's really not a pleasant story, in my opinion. I don't even want to mention it right now. But the fact that they have the power with which they have is not a good thing, I don't think. Now,
No, I agree with you. The only person that should have the power is He-Man. We all know that. All right.
Unless Grayskull takes
and
or Grayskull.
Unless
Skeletor takes it from him.
Grayskull.
I'd be happier with the economy if it was run out of Castle Grayskull, I think.
I think it would be far better run. Tila, He-Man, and Man-at-Arms would be far better than Lackler and Bullard and Yellen at running interest rate policy. I guarantee it.
Right, now I have a hankering to go watch old 80s arcade show or TV shows. Excuse me for a minute. You guys run the show.
Did I tell you I watched the movie that the old movie with Dolph Lundgren? It was on Netflix.
I saw it was on Netflix the other day. I almost made the same mistake. Then I realized how awful it is.
It was a work of art in awful movies.
It's like they took the cartoon and grabbed nothing that was good about it and put it on the screen.
Yes, let's take all the worst parts and none of the good parts, put it on the screen. Thankfully, I started watching it when I was a bottle of wine deep, and so I really had fun.
Well, I mean, just to add to that, though, I don't know if I agree with you about He-Man running it. I agree he needs to be a powerful man in the cabinet, but it needs to be King. We need to have the proper Eternian hierarchy here. King Randor needs to do it with Prince Adam, and then we need to get stuff done. When 08 comes around, then you bring in He-Man, Man-at-Arms to get stuff done.
They're kind of like the Sergeant-at-Arms of the Federal Reserve. I like that. I think that's smart.
Yeah, so let King Randor do his thing. He did a good job with Eternia.
My mind is boggling at the He-Man oriented titles for this episode now. So many to choose from.
So who's the German guy that who's the German guy that was like really against QE, really against easy money, that was like against the Greek deal?
Oh, I was about to say Ram Man.
I thought you meant like Ram Man too.
Shalbel.
I was about to say Ram Man
I was just
myself.
saying Shalbel could be Skeletor.
We're going down a really weird path.
And Shalbel could be Skeletor, and what's her face could be Evelyn from
Merkel.
From the
Merkel, Evelyn, or is she more of a?
Could be Evelyn.
Is she more of a Shira?
She's more of a Shira. Maybe Lagarde. Be Evelyn.
We're going down a weird path, but I kind of like it, listeners. But to bring it back just to options and indeed derivatives for a second, there are all these people pointing all these different fingers, and you mentioned, Mark, of course, the big banks. Kind of hard to have them come in and subsume all of this debt and all these issues, and then say, by the way, you're going to jail now. Wouldn't really work. But on the flip side, some of the early progenitors of this crisis, things that got the ball rolling, certainly point a lot of fingers over there at AIG. They were essentially just writing puts to the world, essentially saying, we're going to insure the world against all catastrophe, and they had never had any possible way they could ever make good on that, and that kind of got the whole ball rolling. Of course, you got mortgage brokers, a lot of guilty fingers, a lot of guilty people to point at in that pie. But still, it probably would have been interesting if they had at least attempted to ferret out some sort of culpability in all this. And clearly, Uncle Bed / King Randor feeling the same way. I wonder who would be Skeletor in that metaphor. We'll have to think about that.
$1 million loans to fry cooks. That was kind of one to where the mortgage broker says, oh, well, you might get a $10,000 bonus every month. Wink, wink. And then they say yes. And then they get these mortgages that there's no way on earth they can afford. And because of the fact that the government wanted to ease the mortgage requirements, that's the other thing.
They were kind of forced into it. Right. I'm with you, Mike. They were kind of forced into it.
If anyone needs to be arrest the politicians that Congress. Yeah. Now there's something no one's ever thought of before, arresting Congress.
Yeah, they were the ones that were browbeating the banks into this whole mess. And in terms of AIG, that was more related to ridiculous mark-to-market rules as it was writing puts to the world. And really, I think
that's what ended up blowing them out. But the risk they put on was clear and demonstrable. There was some risk that's
there.
The issue I had, not the marking of it after the fact.
But really, and it comes down to Fannie and Freddie basically writing open checks to the world and backing everything where as long as they could prove the person had a pulse, they could get a loan, and maybe even then they could still get one. I mean, it was that bad. So there's a lot of culpability to go around. And for Congress to point fingers at the banks when they're just as culpable, I think is a real issue.
True story. I had a colleague of mine back in 2006, I believe it was, said, time me. I'm like, okay. So he gets on the phone. He says, I'm going to have $1 million by the time I'm done with this phone call. Go. And so it was probably about 6 minutes that he said, okay, I'm approved. Thank you. It took him 6 minutes to get approved for $1 million loan on his new home.
Oh, geez. I wished listen, that's too fast, but the process now of basically having to undergo internal surgery.
It's a colonoscopy now by comparison, yes.
Yeah, I mean, there's got to be somewhere in the middle.
Having just gone through the process.
They don't need to know who my first grade teacher was.
Having just gone through the process, my internals are clean, shall we just say, having just finished it myself. So yes, there is indeed some middle ground, and there is indeed some time to keep on rolling with the program, eventually into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Any day that we get to throw He-Man into the program is a good day indeed, but unfortunately, we got to keep rolling with the show. Maybe we'll find some way to keep that He-Man metaphor alive as the program keeps going. We're going to kick it off with our first name. Don't really see an Eternian connection here, but we'll try nonetheless. This is out here in, of course, the Materials Select Sector SPDR, aka XLB, closing today right around 42.5 or so, up about a handle or about 2.5% on the day. This is the name that does a decent amount of paper, certainly for an odd block candidate, doing about 11,500 contracts on average on a given day, doing about 28,000 today. So a lot of size coming out here, and what caught our eye out here in all this flurry of activity in XLB was a pretty straightforward, at least on the surface, put right. And it caught our eye out here in the NOV cycle, in particular the NOV 40 handle, where we saw someone this morning opening up, blasting out about 7,300 or so of the NOV 40 puts for about 69 cents. Price actually one block, so 69 cents in that first kind. Again, one block on the Philly. As the day went on, another couple of thousand kept going to the tune of about 9,300 and change. All this clearly opening because only 100 and so on contracts open on the strike. So clearly open in paper. Looking at a chart, doesn't look too head-scratching why our friend here may be deciding, you know what, this one's kind of beat up. I may want to take my chance on either a wheel or just picking up some of the underlying down here at these levels, and I'll use a put to do it. I didn't see any stock or anything else that would give an indication that something else is afoot with this trade. It appears to be what it is on the surface. Straight up put trade, perhaps, as Uncle Mike indicated at the top of the show, perhaps a bit of a wheel trade getting started. Mr. Greasy Meatball, a.k.a. Evil Lynn, start us off here. What's your call on this XLB? Looks like open and put sale here.
That's Tila to you, first off.
She had who had the more revealing outfit is the question, Evil Lynn or Tila? I think Evil Lynn had more coverage because she had a cape. So
yeah, indeed.
She could wrap it around herself and be more modest at times.
Exactly.
Tila was just out there to the wind.
Well, yeah, really, the guys who are really out and about were the male characters, not even so much the female ones.
There was a lot of ambiguous sexuality on that program.
It was like those shows were like constantly. It was like a half an hour of the training montage from Rocky 3, basically.
Don't mess with Rocky 3.
Save us, please, XLB. I could keep doing this all day, and I know our listeners are probably going crazy.
No, I mean, it makes sense, right? Vol's still high. Maybe we're getting an inkling that, now that the Fed doesn't have a choice anymore, that, maybe we're going to rally. And that would explain exactly what happened today with that trade.
Yeah,
so,
not what happened the rest of the day, because that's clearly inexplicable. But this one, a little bit more explicable.
I'm wishing he did a more traditional risk reversal.
He might be. This one turns around pretty aggressively. Often do we say that, where I know your partner, Andrew, he's always fighting me on the call leg. Why do you want to buy the call? But in this case, it may work out.
I like buying the call.
Yeah, me too.
I don't have a problem with buying the call. Maybe on a ratio. I'm a big proponent of buying the call on a ratio. Use a little bit just to make sure that you get to wet your beak if the thing takes off.
I think he's just more of a measured approach, Andrew. You sell the put first, and maybe you wait and see, and if it looks like it merits it, then you add the call.
Andrew, if there was ever a term to describe Andrew, it is measured.
That's true. That's true. We use rock lobster euphemistically here on the program, listeners. It's not really applicable at all, which makes it so funny as we move on to our next. And of course, Greasy Meatball, very applicable. And Uncle Mike, sounds pretty good. Rock lobster, not at all appropriate, which is why we love it. Moving on to our next name here. This is one, I'm trying to think, we haven't talked about this one in a while, but this sector is hot. Pretty much every odd block we do, we touch on this sector in some way, shape, or form. This is, of course, in the energy exploration side of the fence, and we're zeroing in on right now Conoco Phillips, ticker symbol COP. COP, closing today just a tick under $53, up about $1.80 or about 3.5% on the day. So exceeding the market to the upside, feeling that oil love as they keep rolling. And of course, a rally in oil, good thing for exploration firms, which have been making some bad headlines of late in the last couple of weeks. Of course, we saw Shell announcing they're essentially scrapping their $7 billion exploration program in the Arctic. So if you're in that side of the business, it's been rough waters of late. Any rally in oil, you'll take it, and you're probably going to rally yourselves as well, as witnessed by good old COP today. today is the name that averages, about 26,000 contracts and change, doing 3x that, about 75,000 contracts today. And what we saw wasn't the lion's share of that by any means, but it was one of the bigger trades out here today, and it caught our eye for a couple of reasons. Looks like the old take some money off the table with a smile on your face and then reapply it at a later higher strike, again with a smile on your face. And what caught our eye initially was on the call side of the fence, coming out here once again down to Nove. In particular, it was the Nove 50s that caught our eye. Starting off the day this morning, paper selling about 8,000 of those for $3 because they're deep in the money now, and then turning around and buying about 10,000 of the Jan 60s, so doing that on a bit of a ratio for 75 cents as the day went on. It's like about another 1,000 or so going up on the 50s. Those have open interest of 13,000 and change. Again, why we feel that our friend is rolling, and also the fact that they're deep in the money. I believe he might have put these on very recently, actually, in fact, as recently as Friday, in which case he's rolling. He's worked out pretty well for him. Certainly the last two handles or so of rally today didn't hurt either, and this one's been gapping up over the past few days. It was trading 48 just a few sessions ago, listener. So our friend here having some interesting timing and now deciding, you know what, that one worked pretty well for me. I'm taking it off the table, but he's not out entirely. He's going back in on Jan, and he did a total of 11,000, nearly 12,000 over there on the Jan as well. So it looks like a bit of an up and out. The only one wrinkle I would throw in here, Mr. Greasy Meatball, is that there is some size open interest on the Jans as well. So do you have the other side of the feeling that maybe perhaps he's just close and taking his money and running? Where do you fall on this one, sir?
Or it could be open. Who knows, right? Maybe he's strapping on more.
He loved it so much, he's like, I got to get more of that 3-handle, 5-handle move.
Exactly. Entirely plausible.
I couldn't really blame him. He's sitting on some cash right now. Of course, for his sake, I would like to assume he's doing the old close and open to take some of that money off the table. I mean, he's sitting on 3 handles and in the money call. It's gone your way pretty well. You know, the old adage, pigs get fed, hogs get slaughtered. Hopefully he's not being a hog in this scenario. But again, the size open interest on that strike in the Jan 60s does give me a little bit of pause. It's about 3-4x more than every other strike out there. Looks like there might have been a vertical, though, too. Could have been the Jan 60-70 vertical. They have about similar open interest. So that could be it as well, in which case this would be unrelated paper, even though it is extremely similar from a size to open interest perspective. But again, that's how the old options market works. Always a bit of a mystery. We attempt to peel back the veil whenever possible here, listeners, but sometimes you got to wait for the old daily open interest update to know for sure. Someday we'll fix that. Someday we'll have instantaneous open interest, listeners, and we'll know exactly what was up with this trade, but unfortunately ain't happening anytime soon. As we wind down our odd block session today, listeners, with another segment of the economy we like to feature on this name quite a bit because they always seem to be rocking and rolling. This is the pharmaceutical sector. This one not really falling in our typical cheapy biopharmaceutical name under the $5 or $10 handle. This one on more of the premium side of the fence. This is Valeant Pharmaceuticals International, ticker symbol VRX, closing today right around 163.5. So very, very pricey name, and also not exactly the best day for good old VRX, selling off nearly 19 handles today, or about 10% on the day. So surprise, surprise, a biopharmaceutical company having a big move. Who would have thunk it? This is the name that does about 8,000 contracts a day, so fairly high volume for an odd block candidate, and doing about 62,000 today. As you can imagine, a lot of that coming on the heels of this just obliteration of the underlying today. I don't have the exact news on what it was that was driving it down today, but whatever it was pretty fierce, and it was pretty near term and pretty aggressive. Nevertheless, though, our friend, undaunted by this aggressive sell-off, or perhaps encouraged by it, trying to get some more premium for those puts, decides to come in and blast out what appears to be a strangle, and strangling a decent range right around where we settled out today. He came in selling nearly 20,000, 19,200 of the regular Nove monthlies there, 145 puts. And about 19,500 or so on the day total on that strike on just 24 contracts open. So clearly opening paper there. And then he turned around and said, that's not enough for me. I got to cap this sucker on the upside too. So he went up to the Nove 190 strike where he blasted out about 17,500 of those puppies. He did them for essentially $7 and $6.90 respectively on the puts and the calls. So almost a $14 strangle. Our friend here, not playing around, $14 for this thing. But then again, the thing moved 18 handles today, nearly 19. So you can kind of see why there's some juice out here in them thar hills. Looking at this chart here really quickly on the upside, this thing had blew well through that strike to the upside as very recently, as recently as late September. This thing was trading 243. And as you could see, off 80 handles just in the past few weeks. Clearly, there's some vol to be had out here, rocking and rolling. But our friend here is saying, you know what? This far, no farther. I'm comfortable taking this strangle here for about $14 in good old VRX, which of course puts them right around the 130 handle on the downside and right over the 200 handle, 204, so on the upside. Mr. Rock Lobster, take us home. What's your thoughts on our friend pretty much drawing a clear line, 2 lines in the sand to be precise here in VRX, saying this far, no further?
Did you just call me Mr. Rock Lobster? How dare you?
Did I do that? You know what? I had it in the back of my mind. We were mocking his pseudonym so much that it kind of just applied. There you go. Run with it. Think of it as a compliment. You're very measured today.
Yeah. That is not within my risk profile, but this guy clearly thinks he knows what he's doing. And they're on a lot of they're not too popular with Congress right now. So, that they really got screwed by that guy who jacked up the drug by 7,000%, because they're usually only in the business of jacking the drug up, 4 or 5x.
Oh, this is some of the Hillary sell-off here. Yes.
Yeah, this is all Hillary sell-off, and this is all, they got called in front of I think they're supposed to testify in Congress, so there's some issues there for them. And so again, it's probably a good trade. That doesn't mean it probably will make money. That doesn't make it a good trade. Let's just put it that way.
Yep, the horn high yo looks really good when someone's throwing 3 or 5 of them in a row on a craps table. Doesn't mean it's a good long-term bet. This one, kind of a similar analogy. I can certainly see why it's attractive. That is a lot of juice for that such a near-term strangle. But again, this thing moved nearly 20 handles today alone, which would outstrip that strangle in either direction. So interesting stuff. Got to table it there, though, folks, as we keep on rolling with our Monday show. It means it's Monday. It's time for Uncle Mike to take the reins. It's time to dive right on into the strategery block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, I know you're up against it, so dive into it, sir. The floor is yours.
Yes, sir. All right. So today I want to talk about what to do. We've talked about this on the show before, but I want to go over it again because I think it's kind of timely in today's market about what to do if a covered call is going against you. And by going against you, I mean going for you. Here's what I mean by this. A lot of times, sometimes what people will do when we have a dip in the market and you have a current long stock holding, you're thinking, crap, this thing's going to keep going down. I'll sell some covered calls on it for the time being just because it's probably going to just either go flat or keep going down. I'll just sell some calls on it. So naturally, Murphy's Law dictates that as soon as you do that, the market will go right back up again. And for some of you, it's been doing that lately. So I want to go over some things with which to go through as some ways to be prepared for that or to adjust for it when such a thing happens. First off, I want to go back to my double chicken wing analogy. If you are a wrestler out there, without a doubt, by far the best counter move to a double chicken wing in wrestling is not to get into it in the first place. And that's what I would encourage you to do on covered calls in a down market on underlyings that you already own but are long-term bullish on. So in other words, let's say that if you have a stock and it takes a pretty decent hit, let's say it goes from 55 down to 51 during this last little hiatus from the bull market that we've had in September, so to speak. And if that is the case, don't go out and sell the 52 half call for 50 cents. That's a foolish thing to do if you're still bullish on the stock. Now, if your sentiment has changed and you think, well, we probably are going to be going sideways for a while, and you have reason to believe that we are going sideways for a while, whether it's through your technical analysis, fundamental analysis, volatility analysis, whatever, then that's fine. But if you're just selling a covered call as a means to collect some type of a lifeline to where you're thinking, well, at least I should get something, then what you're guilty of is trying to do something to make yourself feel better, even though doing something isn't the right thing to do. So what I would recommend doing is making sure that you have a reason to sell that covered call in a down market before you actually do it. And a lot of times you don't. Now, what I do like to do, and I talk about on the show all the time, is in a down market, if I go from being flat to selling a put to get into something, that's okay because of the fact that I'm trying to build a position. It's a reaction of what I wanted to happen because I was flat in the first place. I'm not talking about that. I'm talking about when something goes against you that you're already in. Now, with that being said, the next question is that, okay, I'm in a covered call right now. I actually did what you told me not to do, or I did it because I believed that the market was going to be sideways or the stock was going to be sideways for a time frame. Stock's going against me now. What can I do? Couple things. First thing with which you can do, if we have a drop in implied volatility, I like to enjoy the fact that maybe I'll sit on it for a little while. If it's in the money a little bit, sit on it. Let the time decay do its thing. And the reason that you would consider doing that is because of the fact that you're thinking, okay, well, I'm in the money a little bit. I don't think it's going to rally that much more. It's no sin in sitting on a covered call. Second thing you can do, roll up. Now, a lot of times I'm not a huge fan of rolling up because of the fact that it's generally not a good thing to do from a volatility standpoint. A lot of times volatility might be a little bit lower at the higher priced call, or I'm sorry, the higher strike calls, not always, but with a lower volatility, which often happens when stocks go higher, the premium's not going to be as good of a bang for your buck at that level. Something to think about though. And the final thing that I would recommend doing, if you know that you want to sell some premium, but you're just concerned about the stock going way too high, here's the compromise. It's not perfect, but here's the compromise. Instead of selling a covered call, sell a call spread. So for example, if you want to sell that 52 half call on that stock that just went down from 55 to 51, maybe consider doing a 52 half 55 call. And by doing that, if you can get maybe 50 or 60 cents for it, yeah, you're still giving up upside, but for some reason the stock has just a major surge to the upside to say 60 or 65 during the time frame you have that covered call, you're only missing out on $2 instead of the entire upside. So those are my thoughts for today on the strategy block for dealing with covered calls that are going against you. Oh, wait, they're actually going for you because the market's going up and you're making money. But finicky covered call traders sometimes feel like they're going against them. Beware either way, folks, and that's one to grow on for today.
We could probably do a whole show on that, just backwards mentality of covered call traders in general. Like, people write in, my covered call is going against me. It's like, no, you have the stock. You should be happy. But c'est la vie. And of course, Uncle Mike, second you roll and take that hit on the call is when, of course, the stock retreats. And then you feel doubly stupid. You feel doubly stupid and doubly angry, and you're going to write an angry email into us saying how come this doesn't work, or perhaps call you if they're one of your clients. So there you go. Words to live by from Uncle Mike. And now we're going to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Like the man said, this is indeed the portion of the show where we give you our insight into what's coming down the pike here in the week ahead. And I'm hoping, and maybe you guys are out there too, that we can maybe turn our attention away from some of this kind of macro nonsense that's been obsessing everyone of late. Will they, won't they dance with the Fed? When's the next sucker punch coming out of China? And kind of turn our attention back to what's actually moving and shaking here in the actual economy and the actual stocks that we're looking at, because it's earnings season yet again. Yes, it's that time of year. Alcoa kicking it off, even though they kind of maybe already spilt the beans last week with their big kind of split announcement. But that said, they are going to kick it off later this week. So we've got, of course, and then, of course, PepsiCo and Yum Brands, your favorite, Mr. Sebastian, coming out tomorrow after the bell. Wednesday, good old Monsanto getting in the ag side of the space. And then here comes Alcoa the big A on Thursday to kick things off, as well as, of course, everyone's bellwether, the economy, Domino's Pizza. And then it's kind of off to the races from there. So what do you think, Mr. Greasy Meatball? You think we can finally safely do that for a week and say, we're going to watch some actual earnings numbers, or is there going to be more nonsense, you think, in the ether to perhaps cause the market to sell off and get the vol back over 20 again?
Generally speaking, the things that really throw off markets are not when there's kind of one thing wrong, but when there's multiple things wrong at the same time. So we had this kind of worldwide macro thing, but U.S. markets were fine. And then at the same time, you've got the Fed being all nonsensy, Pippi Longstocking. It's crazy. I mean, it's like the cat in the hat over there. All right, that is what it's like over there. So now that the cat in the hat has grabbed thing one and thing two, and is on his way out the door, I do think we can focus on earnings. And I think earnings season, they've been sandbagging them so bad for the last 3 months. I mean, all I hear is sandbag out of corporates and corporate earnings. So I think that we could see a lot of upside surprises this time around due to all the egregious and copious amounts of corporate sandbagging.
I don't know about you, but it'll be kind of refreshing to me to just look at an individual name, look at the volatility that's around that name, look what the market is pricing in for an earnings announcement reaction, and then see it unfold accordingly in the market and not have other will they, won't they, ridiculous macro nonsense feeding in. That stuff never goes away entirely. Obviously, it's always going to be in there, but it'll be refreshing to kind of focus on that for a change. Do you agree?
Yes.
I'm looking forward to sinking my teeth into a nice earnings straddle. I don't know about you.
Yeah, me too.
It'll be tasty.
It'll be fun.
Hopefully delicious, and it sounds like maybe a little bit overpriced, which we love to hear.
I think there could be a lot of overpriced, except for in like Google and Amazon, which will rip people's faces off.
Maybe one day Jared will finally deliver that earnings straddle that I paid for, and then of course we'll be all set and see how these results
I don't know about
actually
that.
play out.
Jared has slipped into the ether himself.
Yes. He was always somewhat ethereal himself, and now he quite literally meets that description. Unfortunately, listeners, Uncle Mike had to run. I think they turned off the internet in St. Charles, so we had to bid him adieu a little bit early. But he said to remind you guys to watch out for perhaps the surprise Fed rate hike next week. Keep an eye for that. Of course, I am joking, and of course that means we're going to do it here for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, allow me to remind you to surf on over to RCM Wealth Advisors, see all the cool stuff that Uncle Mike is cooking up over there. If you want to just reach out to him directly, Tosaw at rcmfs.com. Gets a little confusing. They have various different emails over there. Just use rcmfs.com. That one will get through to him, and he could tell you how he could probably save you some commission dollars, or perhaps even roll those puts, or more appropriately, as he's talking about today, perhaps roll or not to roll those calls for you. So you can just do your job and have fun and not worry about this stuff that's cooking off there in the old marketplace. And Mark, I know you guys over there, are you in the midst of, or did you just finish the big boot camp over there?
We just finished the big boot camp. It was a big success. We had a lot of fun. A lot of people enjoyed it. And I was very, very pleased with that. For now, just read our blog. We'd like to remind everybody that we've been calling for no interest rate hike in 2015 since January. Actually, we've been calling for no rate hike in 2015 since 2014. So that's the type of economic forecasters we is here at Option Pit. And if you want some awesome Option Pit content, go to our blog, optionpit.com/blog, and you can read all the smart and smarmy things that Andrew and I have to say on a regular basis.
And I'll let you, the listener, guess at home which one is smart and which one is smarmy as you surf on over to optionpit.com/blog to see for yourself. And on behalf of the greasiest of greasy meatballs and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, keep those questions coming. We'll answer them on Thursday, and we'll of course see you next time right here on the Odd Block. Actually, wrong show. On the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.